All right. Almost high noon. I do believe that sometimes these used to start at 12:30. We always start about 6 minutes after the hour to give people time. So this is going to be recorded, like I said, so we can put it out there and get more long-term traction. Do you have a slideshow that you are going to be, or any slides you're going to be showing?
Yes.
Okay, perfect. That'll be good for the presentation purposes. And yes, I appreciate you showing up. And we'll get this going here in about 5-10 minutes, right?
Cool.
Thank you.
Welcome, Rhonda.
Thank you. Thank you.
Hey, Rhonda, how's it going?
Hey there, Larry. It's going okay. How are you?
Doing well. Thank you.
That's good. So you ready to impart all this knowledge on us?
Do a little bit, see what happens. Mix it up a bit.
I got my notepad ready.
You and me both.
Everyone.
Welcome in, Zach.
Thank you. Gonna mute myself.
Welcome, Charles.
Hey, how are you?
We are good. I'm gonna get started here in just a minute.
Yes, thank you. Welcome to Lunch and Learn, hosted by the Node Assistance Program, and excited to be educated by our very own member, Mr. Larry Pendleton. Going to embark some knowledge on us all here. We're going to get started in about 3 to 5 minutes. Give people some time to log in. If you are part of the community and you are able to participate, all we're going to ask you to do is push hashtag NapNation and what city and state you're in. That way, for those of the people who are new and or the people in the community, they can find out if there is someone nearby. We have a nationwide community, so you'll be surprised at how many people may be nearby you that are of like mind. Want to get into that passive income and love to find these deals that are on the side. So I encourage you to put hashtag city and state. Even if you are not a part of the community, then you can let people know where you are and you might find your next JV partner. That's one of the benefits of coming by. So appreciate you stopping by. We'll get started here in a few minutes. And we will talk to you soon. Thank you very much. All right. Let's get this thing going. And we've got Joy. I want to say thank you for coming in, and she's going to let people in as they show up. And thanks for also, I will give you an opportunity to introduce yourself and your services at the end when I tell everyone about what we're doing here. So thank you again for helping. She's the one that sets these up and makes sure that the rooms are open on time. All right, she's out of LA, California, West Coast. All right, real quick, let's talk about general disclaimers. So worked with Larry now. I think we're coming on either end of our first or beginning of our second year. And so with everyone that we come, we really value the expertise. But you know, the results of the investments and the advice you get are going to be unique to you. So go ahead and check for accuracy and trust but verify everywhere, and make sure you speak to them and Larry directly to see how all his advice will apply to you directly. So that's what we went over here as well. We tend to show some live inventory. So if we do show any inventory here, if Larry speaks of any live inventory, same thing applies to the opportunities that he may present to you, whether it's to work with him and or as an active investor, the joint venture with him. A lot of people do work with him in the community, and we're very fortunate to have him to add value. Code of conduct, won't spend too much time here, but if you're new, we just like to be respectful. We all come from a place of wanting to educate and have a safe place for those of us who have capital and are not ready to go out there with the sharks and be eaten alive, so to speak, just yet, right? Or even swim with them. So we're all here working to build our capital that we have, and we've done this successfully for the last 13 plus years. And so I look forward to introducing you to our community. And for those of you who have been here for a long time, thank you again for making this that safe environment. All right, you can find us online. Podcast is still out there live and kicking. We will start some new episodes where I'm going to be interviewing some of my most trusted people in the industry, a little more one-on-one. You'll see that coming out in 2025. You can also find us on Facebook, LinkedIn, Meetup, and all the other good places. If you're in Southern California, you can find a lot of online, in-person events happening in 2025 down in the Escondido, Los Angeles area. and perhaps even a little bit of Northern California by the Livermore area. So stay tuned. We have our Make Money Go to Heaven fund. We won't talk about that here today, but that'll be kicking off in January. And without further ado, you can scan here or text 855-541-6683. That's 855-541-6683. You can text opt-in, and that will keep you abreast of all of our meetings like this. You'll get a text message saying, hey, here's the link. And so I believe if you scan this, it should take you there. And as I wrap this up, I'd love to have Joy tell everyone a little bit about what she does and how she supports the community outside of these videos with her due diligence. And then we'll get into what Larry has for us. So Joy, can you tell us a little bit about your legacy company?
Well, hello, everyone. Actually, my company's name was DP Legacy Property Solutions. I have actually dissolved that as of October. But I am still available to do your due diligence as a due diligence asset manager. I assist people in various ways with due diligence. Some people don't need full due diligence. Some people might just need assistance with a spreadsheet, or they might need assistance with calling realtors or getting comps. So I don't just do full due diligence. So if you need just a little help, I do that as well. So I don't want you to feel like you can't call me if you just need some assistance. In case you're working throughout the day, or maybe you don't have time. A lot of us work during the day and they don't have time to really work on due diligence completely. Maybe you need help with calling the tax assessors or the county clerk. So if you need my assistance, I am always available. I will put my phone number and my email in the chat, and you can feel free to contact me whenever you need.
Perfect. All right. Then let's jump into it. So we've got a very successful man in a well-rounded approach, right? So that's what we love to practice here. I happen to have the opportunity to meet all of my members from a personal level, and I've broke bread with this man and his family out in Virginia. He's definitely a brother from the land out here, so he's been taking some, and I say that like figuratively speaking, right? Because he's able to take some of his opportunities with the land that he has. He'll talk to you about that, but does a lot of ground up construction and stuff like that. So I'm very excited to introduce you to a man who's very well diversified. And now that we've got him on the note side of things, he's able to help us talk about how that works with your tax situation, which is very, very, very important. Ask him how I know, just not today. All right, Larry, if you don't mind coming and telling us a little bit about yourself, and then, we'll practice and how we can best use it as note investors.
Awesome. Appreciate it, Jasmine. Yes, Larry Pendleton, CPA, known as the Investor CPA. Been in this game for as a tax advisor for over a decade now. Been investing in real estate for tax advisor for over 2 decades. Real estate investor myself for over a decade. Flips, new construction, rentals, short-term, long-term rentals. Was fortunate to meet Jasmine in June of 2023, and just changed my whole mindset of how to build cash flow. If you can't tell from my shirt, was really kind of important to me from an investing standpoint. So I do run a tax consulting firm called PC Financial Services here in Virginia. We service clients about 26, 27 states now, mostly in the real estate niche. And we also raise capital for our new construction deals, as well as been trying to close on some notes. Been fortunate to work with several NAP members, Rhonda being one of them. Joy has helped with doing due diligence on other deals that we closed on this past year and some change, and looking forward to doing more. But yeah, I'm always here to help and be of value wherever I can. And I'm gonna jump into the presentation. See if I can pull this back up again. If it'll let me.
And while you're pulling that up, you're out in Virginia. Did you mention that to them? What part of the country you're in?
Yes, I'm in Southeast Virginia, um, Norfolk, Virginia Beach area, if you're familiar with it. So yeah, that's where I'm currently located at this time. Oh. Can y'all see the actual presentation or the?
Yes, we see it.
Okay, great. So yeah, purpose of today's call really is to kind of give a base understanding of the tax saving strategies when it comes to note investors. So I think there's three essential things to keep in mind when you come into the note space of where the tax benefits are, and obviously working with the right advisors, right team to ensure that it all works, makes sense for you. This kind of collage of just just who I am. Like I said, been dabbling in the multifamily space is kind of where we started, and phasing in the new construction stuff. There's my partner Terry Connors is a Class A contractor, and once I was able to communicate what I learned in that to him about no investing, and so he's all in now as we raise more capital and change our investment model from a cash flow perspective. And then I probably gonna get an updated picture of the family. That's my lovely wife Whitney, and my knucklehead boys, Larry the Third and Wesley. But first and foremost, like I said, my PC Financial is my company. I also have another company, CP Realty, and I partner with other organizations as well to provide whether it's investment. Yes.
Sorry, I don't think the slides are changing. Is it changing? Is it just me?
No, it's all just one slide with just everything kind of collide to me.
Okay, sorry.
You see that switch?
No, we're still on the three essential tax saving
Oh,
slide, the first one.
that is interesting.
You said your lovely wife, and I said she's a spreadsheet now?
Yeah,
all right.
see that tab?
There we go.
Huh.
Yeah, we can see that now.
I don't know why
Is it in presentation?
yeah, I'm in presentation mode. It says I'm presenting.
Now we see slide 2 now, but we also see the thumbnail on the side. So I don't know if that makes a difference.
Yeah, I wanted to have the slides all kind of flow to the animation and everything. Oh man.
We can click through it. At least we can see it. I want at least we can let
Yeah.
eyes. Thank you so much.
No, I appreciate it. I forget what's going on with the Google Meet here. So focus back into it. So this was the collage I was referring to. Just kind of everything that I've been dabbling in as well. But always like to start with my mission is to help people achieve financial freedom by building passive income and tax planning. I think both are needed in order people to really kind of live out the life they want on their own terms, instead of just focusing on just tax savings. Like, you have to have the right investments as well. My model is kind of somewhat based off the people kind of see it as the cash flow quadrant, but there is a tax perspective to it as well. Because even though there's most of the money is on the right hand side of the quadrant, they also pay the least taxes. So as investors, that's what I always kind of lean into, because not everyone can be an entrepreneur and run a business, but we all are investors in one shape or another. Whether you're investing your time or your money, you're using something to gain more capital. So the more we can do that and be smart about it, we can help save on taxes and build wealth at the same time. I don't want to take up too much of y'all time this afternoon talking about taxes, and I know it's not the sexiest thing in the world to discuss, but we'll take these next 30 minutes to discuss just the tax advantage income and note investing, bookkeeping, which is even less sexier than taxes. And then we'll also talk about self-directing as well, for those that are not familiar or just need a reminder of it. But we'll dive into each of the topics, and I'll try to add some extra bonus stuff as well. I know Jasmine threw a disclaimer out there. I'm gonna throw my own disclaimer. I am a CPA, I am a tax advisor, but I'm not your tax advisor. Highly recommend that you take wherever I say, verify with your team, your advisors, to ensure how it applies to you. I'm happy to address things because everything is all, there's no one set for when it comes to tax strategies and investments. You really have to kind of know your situation, how this all applies to you. So this is my, I guess, character that I always kind of use. Jerome, W-2 employee. I mean, he has a side business that he's running. His effective tax rate in total is probably 25% once you include federal and state. And as we go through the slides, we'll progress further. But I like to kind of use them as we go along this story and this journey of how we advise our clients. He does have quite a bit of money sitting in his retirement account. He wants to put it in the bank as well, and wants to put it to work. Went to a couple of conferences, learned about notes, and he wants to invest more. So that sounds like a lot of us at that point. What I like to do is kind of like address questions that people have asked me and kind of flow them through this, discussing through this means here, so that if I've not addressed your questions previously throughout these slides, we still have a Q&A, but I try to be proactive and address people's questions in these presentations. So one is about how is note the income from note investing is taxed. And the best way to really, for me to explain it, is to kind of break it out through how the other different categories of income is taxed. Everything, I'm about to switch my format now because I typically do it in transitions, but everyone's going to deal with federal and state income taxes. Like there's not going to be exemptions to whatever your net income is. The big piece of it really is the FICA taxes. So that's the Social Security, Medicare taxes. As W-2 employees, which we all have been at some point, we know that your employer pays half and you pay the other half. And then if you're running your own business, and with his flipping business and with my tax business, and if you're running a business yourself, that you're responsible for those full full taxes. So the full amount for about 15.3%. But as a note investor, the interest income that you're receiving is not subject to those taxes, because those taxes are based on earned income, and interest income is considered portfolio income, only subject to your federal and state taxes. So so let's put some numbers to it so that we can actually see how that goes. So if you're making an additional $10,000 in any of these buckets, I wanted to kind of clearly illustrate of what the total tax hit would be for each one. As I mentioned before, the federal state is going to be consistent across the board, but as we're filtering, okay, how much the FICA taxes each group has to pay, you can see that note investing inherently saves on taxes in general because it's not subject to this additional FICA taxes. And then if you're doing more long-term notes, or you're selling notes that you held for a long period of time, depending on where your income as a total is, your capital gains rates could be 0, 15, or 20% at that point. So most people are going to fall into the 15% range based because how the income brackets are laid out that way when it comes to capital gains. But I wanted to somewhat illustrate how the taxes are kind of factored in. So you can either work more and get paid more as a W-2 employee and see more taxes that way, or just do more for your business and try to get more tax deductions. But if you end up netting anything, you'll see more taxes that way, or be more of in that passive role, not as active, and still be taxed, but not as harshly as the first two buckets. Any questions on this? Like I said, hopefully as I try to try to clarify these, but I'm happy to address any questions before we move on about how note investing income inherently is more tax advantageous than making more money as a W-2 employee or running your own business.
No questions, just a comment. I think that slide is very helpful, how you have it laid out to show you the difference in the 3 different categories.
Yeah, you could thank Brittany for that. She typically straightens me up on not talking like an accountant all the time and having to break this stuff down better. Cool, let's move on.
I agree. Wonderful.
So, and as I'm breaking this stuff down to Jerome, one thing people keep in mind is that since as a no investor, in most cases, if you're just buying someone's mortgage, you're not owning the property, you just own the paper. So stuff like taxes, insurance, repairs, depreciation, when you're recouping the cost of the building value over a certain period of time, like you don't get that deduction because you don't technically the property has like you're not the owner of the property. You just control the paper. So they're always that concern of like, how can I reduce these taxes? What else can I write off? Is a common question that I get if I don't have those major deductions that can people try to get to a loss or whatever, and always lead people back to the unsexy thing about bookkeeping, because there are expenses that you're incurring along the way, and you need to be tracking that stuff. The number one, I see expenses missed all the time by all types of investors, all type of business owners, because they're not really on top of their books, because they don't want to invest into certain technology to help track it or invest into a bookkeeper. But if you can't prove what you spent, you're not going to be able to deduct it. Because at the end of the day, I have to protect your blind side, because if you're audited and you can't prove these expenses, then you're going to have to pay it back plus penalties and interest. The chance of being audited, like I said, I'm not saying it's a huge audit risk, but just be mindful that the burden of proof is on you. If the IRS comes knocking and say, can you prove whatever, all these legal fees, interest on the debt, servicers, due diligence fees, you say you paid this lady named Joy, like where's the receipt for it, where's the invoice? If you can't produce that to them, then that's going to be they're going to penalize you for not being able to prove that. So though, like I said, though we're talking about the actual type of deductions, it's important to have the bookkeeping in place, because there is opportunities to see what you missed along the way and get those deductions.
Much respect for the bookkeeper. Much respect. Bookkeeping is not easy. I learned that through QuickBooks, trying to keep up with that stuff. My CPA sent back a whole list of stuff. I was like, oh no, I need a bookkeeper.
Yeah, and I dropped it as a service line for our business, because it's one of the things where it's a necessary evil, but
Yes.
it's not value as such. So I work with bookkeepers who their primary focus is that they love doing it, like great. But when it comes to deductions, I always want to tell people, don't ask your advisor what can be deducted. Really ask how you can deduct it, because you can. Not saying there's an answer yes to everything, but we can go about and try to, hey, like what do you or how do you think this can be deducted? For example, I have a client, note investor. His kids help with with mailing out flyers and mailers and whatever, just reaching out to seller finance, people who seller finance their properties and try to buy their notes that way. So technically, he said, how can I see? He said, like, what can I deduct, or how can I write off my kids if don't have an actual business in place, it was like you still are incurring an expense for that investment that you're doing. So technically, you are running a business per se. So now you're having to pay your kids as if they're W-2 employees, and there's particular reasons for that. You don't want to 1099 them, and you want to treat them as contractors because you're subjecting them to additional taxes. But we had to come up with a way to how to explain and how to really write out, okay, here's their employment agreement, here's how much you're paying them based off of what the market in his area would be for that type of service. And then basically a shift in income of, instead of paying them an allowance, are actually paying them a salary as if they're W-2 and get the deduction from the business that way. I also like to kind of play this game of, anybody want to go around the table, like, hey, try to shoot something at me, like, how can I write this off? Like, I'll say, go ahead and go for it. I always enjoy that aspect of what people try to throw out there as a potential write-off. Any takers? No? Cool.
I'm thinking.
Okay. You know where to find me. I'm still here. As mentioned before, Jerome did have some funds in his retirement accounts and really wanted to learn more about how to use his retirement accounts to invest into notes. Typically, it's not something you're going to see in the bigger company, the bigger custodians. I'm not going to name any names. You may having to move those funds, roll those funds to different companies, do specialize in something called self-directing. So self-directing actually allows you to invest in what you know beyond stocks, because the bigger custodians, the more well-known custodians, that's really how they get paid, is through what those stocks and bonds are paying them. So they're incentivized to invest people's money into those areas. Whereas you could be more well versed into notes and tangible properties and being a private lender, crypto, tax liens, precious metals, so forth and so forth. So whether you have an IRA, 401k, a HSA, a Coverdell educating account, you could possibly move those from where they currently are with your custodian to a custodian that does offer self-directing, and that allows you to grow your retirement account in that sense there. Constantly always like working with, not just from a tax planning perspective, but also for our deal, we work with people who may be private lenders for us, and allow them to help them like beef up their retirement account in a way that they feel comfortable with, because the investment is backed by real estate. And that's a key reason why a lot of us are in the first place. So, but whether or not self-directing works for you is a different question of itself, because there are pros and cons. And like, cons is that you must be passive. Like you you cannot benefit from this from a tax perspective or from a cash flow perspective. So if whatever money that's made within that retirement account, if you're trying to avoid penalties and interest and taxes, it all goes into that account. There will be administrative costs associated with it. Understand what those costs are. It may not be offered by your current custodian or the financial institution that you're at, so you may have to roll it over to somewhere else. And if it's a 401k with your employer, I'm not aware of any really employer 401k that are allowing self-directing, unless those people who have solo 401ks for their own business, they allow it. But if you're working for someone else, it's not really an option that I've seen. And then obviously, if you're working with a traditional or traditional IRA or 401k, you are taxed on the distributions on the back end once you have this start to take this minimum required minimum distributions in your retired years. But the pros outweigh the cons to me, because for me, even though a passive may be a con, I find that like that's why we ended to be passive investors. and not be so bogged down. Especially for me, like at one point I did own 62 doors, and it's a headache when you got repairs and maintenance, and constant costs that's constantly coming up. So being able to be more passive helps along the way. As mentioned before, you can invest in what you know, with self-directing, and typically it's fairly easy to roll over the funds from existing accounts. So if you got money in an old 401k from a previous employer that you haven't done anything with, getting those funds rolled over, and start to grow in a different way, helps from there. And the growth within it is tax free. So whatever interest income that is being made, it grows tax free within the account. And then to offset the taxes on the distribution on the back end, there are certain Roth conversion strategies that can be implemented to how to move funds over at the proper time to mitigate your tax hit along the way. Because you don't want money just sitting in a traditional retirement account, and now you're at retirement and now you're getting taxed on the back end. Working with a tax advisor long term to help know when to move funds over, when's the proper time to take, because a regular traditional Roth conversion is a taxable event. So there is a time and place to do it. It's just planning out properly based on how your income is in any given year. Any questions on that?
No, sir.
Those are the three topics I did want to cover, but I did have a bonus and a bonus topic, and in honor of the most recent Scrape the Tape, I did want to go over lease options.
Nice.
The purpose is that the lease options are treated rather similar to rental properties. If the option to buy has not been exercised yet. So that aspect of where you have this rental property is lease is a rental property. Same thing. it's just different verbiage at that point. Now, instead of being portfolio income that you're receiving, it's considered passive income. Pretty similar portfolio where it's not subject to FICA taxes. You still got federal and state, but you don't have the FICA taxes. Now, because you may have to be responsible for more of the expenses, so the taxes, the repairs, the supplies, if you're now having to deal with those deductions that you're able to write off. So it comes with additional costs, but you do have to be able to write those off, along with the opportunity to take depreciation on the property itself. And depreciation, once you back out, if this is land, it's not going to work for you. But some actual building on the property, you can then recoup the cost of the building over a certain period of time. Typically, it's called a paper loss, a paper deduction, or a non-cash expense. But that's really becomes the big appeal for a lot of people when it comes to investing in real estate in general, is depreciation. Then you can start to get fancy with it with cost segregation studies and bonus depreciation, where that allows you to front load more of those deductions in the year that you're applying the cost segregation study to. It doesn't create more depreciation, this allows you to front load a bit more, because a normal rental property or lease property, the building depreciates over 27.5 years. Not everything in the building is 27.5 years. There could be carpet, there could be appliances. That's all 5-year property. There could be a shed or a fence. Those are 15-year property. So those create large deductions in the earlier years. Once you can apply the cost segregation study to break those components out, because you don't really know those values when you first acquired the property. And then it's really depreciation that's creating the net losses, with real estate, rental real estate, I should say. And if you have a net loss with your rental real estate, that can automatically offset passive income from other investments that you are passively involved in. Now, unlike portfolio losses, you have your limitation with portfolio losses, but passive loss, if you have other passive income, you can be able to offset that And then depending on your circumstance or your family circumstance of if you're a real estate professional or your spouse is a real estate professional, you can now use those losses to offset other other income other than passive income. So your W-2 income, your portfolio income. There's certain things to qualify for real estate professional status as mainly more than half your work time is in a real property trade or business, and then you are also actively involved with the property that you own to be able to claim those losses to offset other types of income. So I wanted to throw that in there. I got expired on Tuesday, going through straight to tape. But thought that was a good opportunity for those who's still looking for tangible properties and want to know the additional tax strategies with those as well.
Yeah, no, thank you. That is what we definitely call a bonus in this community. That was huge. Excited to talk about that and to know that you can speak to those because they're different vehicles. So I have a few questions, and then for those of you who have some, if this may spare some, then please get in line. I got at least two. So first thing is, I just want to be clear. You can have a lease option and a mortgage in your portfolio, and those will be treated as different tax strategies and can be treated differently. Is that what I'm understanding?
Yeah, so your interest income from your mortgages is going to really be reported on a separate form. Schedule B, if it's just interest, if it's sold, is going to be Schedule D. But as a lease option property that you own, because you actually are buying that property, that's going to be reported on Schedule E. And they, like I said, they're taxed the same from a federal and state standpoint. It's just that it's the losses when their losses are shown like that's when it starts to differ from there. But you're more likely to have losses on the lease option side because depreciation and the other expenses than with the interest income on the actually buying the mortgage.
Exactly. So I'd love to hear that. So that leads me to a clear understanding of just the difference between the two products because a lot of people, and I want to make it, I always love bringing this to attention, but a lot of people get into notes for many different reasons. Some people get into notes to get away from property, right? And some people get into business to get into more property. And this lease option is that vehicle, as he mentioned, where you actually end up buying the property and then may have a contract on it. And the ones we showed recently, two of them had expired, right? And then one of the other two had like less than a year and a half on them. So this is huge, great timing. So the other question I have for you is this. As someone who also works the traditional side of real estate investing, right? And I wish you would, if you don't mind telling them a little bit about what that is, but how has notes or how do you use notes in the long and short term to complement what you're doing since you've loaned them out? But how do you actually use them? Like, what are you doing short term and long term with notes as someone who also is out there doing traditional investing?
Oh yeah, so me and my partner, like when we decided to link up, our main focus was cash flow, and that's why we ended up starting into the rental real estate space itself, and start off with just kind of small multifamily, some single family rentals, and kind of jump into small syndications, and joint ventures from that standpoint. But the mindset completely shift in June of 2023 once I learned about notes because we're getting the cash flow that we're you're able to get the cash that we're looking for without the additional headache of being a landlord. And that was rather critical for us. So even though now even with the tax business and what we do now is, like I said, we acquire land where we are, and then build homes on it, build to sell at this point, and we use part of those proceeds to buy more notes to kind of build up our cash flow. So we've actually been selling off a bit of our portfolio in order to reinvest into the note space. We did try to seller finance. Some of these didn't really work. It was just kind of best to sell them off at that point. Our goal really is to eventually get to a point where, hey, we can build to seller finance our own properties at this point. One, we could do it with the direct to investors. It's just that the rental market isn't really where it needs to be at, where we are, in order to make sense for the buyer. Or we try to do seller finance to homeowners, but we gotta make sure we have our Dodd-Frank ducks in order with that. So we have been talking to a few attorneys on that. So that's kind of our long-term play with the notes. Like, if we're able to build the seller finance, then okay, now we can control the paper, be out the deal without the headache, and move on from there, while at the same time buying up some small notes here and there and build up cash flow that way on the short term. Because most of them that we buy, I mean, there may be at the most 6-8 years left on them. So there's always that, as you told me before, there's always that high chance of them being paid off early, which some has. But it got us going and understanding the process, and seeing that, like, oh shit, this actually works.
Right?
And go from there.
Because you're highlighting the fact that one of the biggest myths about notes is that you have to get in and stick in for 30 years, right? And you've bought some, as you mentioned, that may have only had under 10 years and then they paid off. So you know, before you even closed, I think some of yours paid off. Isn't that correct?
Yeah. So, but fortunately, with the discounts that we was able to get on them, obviously we didn't get the full return as projected, but we still got a great return on investment, because we was able to buy it right, and on the front end. Right.
But like you said, for that process, learning and everything, yeah, seeing it works. Yeah, so no, that's amazing, and it seems like it's a great compliment. I want to thank you for sharing, so people can see how you can weave it in. It's about the diversification. We love speaking of that. So, before we go, how do they get in contact with you? And of course, share your motto, which is written across your shirt. If you can tell us a little bit about that, but.
Yeah. So yeah, just wrap it up here, and I'll tell people there's just action steps, like kind of like what you all are doing. Find the experts like Jasmine and Joy. Make sure your books are in order, and put a plan in place so you can execute and reassess from there. I always try to end like this investing in general and saving on taxes. Like you can't do this by yourself. Having the right team, the right coaches, the right mentors around you goes a long way. So I definitely appreciate everyone taking the time to stick with me on this presentation. Thanks for staying awake as well. So if you want to reach out, there's the link to my landing page, the Investor CPA. You can learn about different stuff we have going on, other topics that I discussed from a tax and investment standpoint. Then you can email my team there if you want to learn more or connect, and see how we can be of value to what you got going on. But yes, I am working on maybe a potential clothing line with this cash flow is king. I like having that discussion with folks who thinks cash is king. But it always funny, like, okay, but we use the cash to buy cash flowing assets. So it's like, is like what's the end goal when it's all said and done?
Chicken or egg, right?
Oh, and then I'm also a model as well, so just want to kind of throw that at the back of the shirt. You gotta have the assets that's producing the cash flow. So there you go.
Yeah, I need one of those shirts.
All right, awesome. Well, thank you so much. Does anyone have any questions or parting words for the gentleman, other than thank you so much to Mr. Pendleton for giving us this birth of education? Now we're going to put this up on. Yes, thank you so much, Larry. If we're going to put this up on our YouTube channel, so you can go back and look at it. And for those of you part of the community, you will get this link sent to you. Okay. Very, very helpful, Larry. Appreciate it.
Well, thank you. Yeah.
Thank you, Larry.
Anything else.
All right. Thank you. Take care, guys.
Bye.